16-year-old girl named Estée Mensa is leaning over a gas stove in the stable behind her family's hardware store. It's 1924. The air smells like beeswax and almond oil. Her uncle, Dr. John Schatz, a Hungarian chemist, is stirring a pot of pale, velvety face cream. He calls his little operation New Way Laboratories. Estée calls it the most important place in the world. Her mother is Hungarian and her father is Czech. She is ashamed of their accents. She wants to be, in her own words, 100% American. And in this stable, watching her uncle's cream catch the light, she figured out how she's going to do it. By the end of the week, she has slathered every girl in her senior class with what she will later name Super Rich All-Purpose Cream. By 1946, she has a husband, a rented restaurant kitchen, and a company. By 1995, the company is on the New York Stock Exchange. By 2022, it owns MAC, Clinique, La Mer, Jo Malone, Bobbi Brown, Tom Ford Beauty, most of the names on your bathroom shelf. And on February 4th, 2025, the company that started in that Queen's stable tells their employees they're losing their jobs. Not because the cream stopped working, because the family that built it spent 30 years buying every brand they could reach, and somewhere along the way, the empire got too big to steer. This is the story of how Estée Lauder built one of the most powerful companies on earth, and the exact strategy that nearly destroyed it. By her early 20s, Estée is selling her uncle's creams door to door, in beauty salons, hair parlors, on the street. She gives every customer a free sample. Her motto, in her own words, telephone, telegraph, tell a woman. In 1930, she marries a garment salesman named Joseph Lauder. On July 1st, 1946, Estée and Joseph officially launch Estée Lauder Cosmetics. 4 products: cleansing oil, skin lotion, super rich all-purpose cream, cream pack. Their factory is a rented restaurant kitchen on the west side of Manhattan. Joseph cooks the cream by day. Estée sells it by night. In 1947, after months of pestering the buyer, she lands the order that changes everything. $800 of product on the counter at Saks Fifth Avenue. It sells out in 48 hours. Then in 1953, she launches a bath oil called Youth Dew. American women up to that point treat perfume as a gift, something a man buys you for your birthday. Estée tells them, buy it for yourself. Sales shot up to 50,000 bottles in year 1. By 1958, Youth Dew is 80% of company sales. Her son Leonard joins the business that same year, fresh out of the Navy. He builds the company's first research lab. He launches Aramis for men, and Clinique, the first allergy-tested, fragrance-free skincare line developed with dermatologists. By 1982, Estée Lauder is the largest privately held cosmetics company on earth. Then on November 16, 1995, Leonard takes the family business public on the New York Stock Exchange, $26 a share. The Lauders walk away with hundreds of millions in cash and a checkbook the size of a country. That is when the real game begins. When Estée Lauder listed on the New York Stock Exchange in 1995, the family had capital, and they used it to go shopping. Serious shopping. MAC Cosmetics, the bold, artist, beloved Toronto brand, acquired in 1998. Bobbi Brown in 1995. La Mer in 1995. Avida in 1997 for $300 million cash. Jo Malone London in 1999. Brand after brand after brand. Here's a quick finance lesson. What Estée Lauder was running is called a roll-up acquisition strategy. Instead of building new brands from scratch, slow, expensive, and risky, you buy brands that already have loyal customers. You plug them into your existing factories, your sales team, your shelf space. You pay a premium, but you get instant scale. It's the same playbook used by LVMH in fashion, by Berkshire Hathaway across dozens of industries. When it works brilliantly. By mid-2010, Estée Lauder had over 25 prestige brands sold in more than 150 countries. Their 2016 acquisition of Too Faced Cosmetics for $1.45 billion bought a millennial brand growing 60% per year. In 2023, they closed the Tom Ford deal for $2.25 billion. At peak revenue in fiscal year 2022, the company was generating $17.74 billion in annual sales. The stock was at an all-time high. Then the wheels came off. For years, China was Estée Lauder's golden goose. The rising Chinese middle class was spending big on prestige beauty. Airport duty-free shops across Asia were printing money, so Estée Lauder went all in. They invested $1 billion to build a manufacturing facility in Japan, specifically to serve Chinese consumers faster. They loaded up inventory. They expected the boom to last forever. Then the pandemic hit. China locked down. When China finally reopened in 2023, Estée Lauder shipped enormous quantities of product into the market, and it just sat there. Chinese consumers had pulled back hard. According to Bain & Company, the luxury market in mainland China shrank 18 to 20% in 2024, falling back to 2020 levels. Estée Lauder was stuck with $1 billion factory running below capacity and inventory being cleared at steep losses. Asia-Pacific revenue fell 4% in fiscal 2023, another 6% in fiscal 2024, and then 11% more in fiscal 2025. 3 straight years of decline in the region they had bet the whole company on. The company posted net loss of $156 million in just one quarter. They cut their quarterly dividend from 66 cents to 35 cents. They pulled their full-year guidance entirely. Then came the moment that shook the industry. On February 4, 2025, Estée Lauder announced it would cut between 5,800 and 7,000 jobs, up to 11% of their 62,000-person global workforce, restructuring charges between $1.2 billion and $1.6 billion. This was not their first attempt. A year earlier, the previous CEO announced 3,000 cuts. It wasn't enough. The new CEO, 1 month into the job, had to more than double the plan. His words, "We are significantly transforming our operating model to be leaner, faster, and more agile." The plan, branded Beauty Reimagined, targets $800 million to $1 billion in annual savings once complete. The restructuring runs through 2027, and in March 2026, it looked like the empire might try one last enormous move. Estée Lauder confirmed it was in merger talks with the Spanish beauty group Puig, the owner of Charlotte Tilbury, Jean-Paul Gaultier, and Rabanne, in what would have created a combined company worth more than $40 billion. Then, on May 21st, 2026, they walked away. The talks were dead, and Puig stock fell 15% in a single day. Its worst drop ever. Estée Lauder said it would go it alone and put everything behind their new turnaround plan. After decades of believing the answer to every problem was another acquisition, the empire's biggest decision was the deal it chose not to do. So what's the real lesson here? 1. Don't let one market become your entire profit engine. Estée Lauder had a global portfolio, but allowed China and Asian travel retail to become an outsized share of profits. When China stumbled, there was no cushion. 2. Timing your biggest deals matters. The $2.25 billion Tom Ford acquisition closed in 2023, right as revenue was already declining. Buying expensive assets during your own financial trouble amplifies the damage. 3. Capacity built for demand that doesn't materialize is fatal. That billion-dollar Japanese factory was a straight-line bet on China's growth. It wasn't. Always build in a downside case, not just the dream scenario. 4. Complexity is a silent killer. Managing 25-plus brands across 150 countries creates an organization that becomes slow and hard to steer. The CEO himself admitted it. We lost our agility. Here's what most people miss about this story. The founder, a child of immigrants, making cream in a kitchen, built something extraordinary. The M&A strategy her sons ran was genuinely brilliant for decades. The empire is not dead. But 7,000 families are facing job losses because of bets made at the wrong time, in the wrong market, for the wrong reasons. That is the real cost of M&A done without discipline. The turnaround plan runs to 2027. A major merger could reshape the company entirely. Whether it works, nobody knows yet. What we do know is this: the strategy that builds empires can destroy them. And the difference between those two outcomes is knowing when to push and when to stop. If you want to understand how companies rise and fall through mergers and acquisitions, and how to use these same strategies to build real wealth, subscribe right now. We break down the deals that shaped business history every single week. Drop a comment below.